morning. Oh my God, it's so packed in here. How's it going in the back?
Wow.
Hey.
Oh, there's people way back there upstairs.
Yeah, like in the Muppets, right? You got two guys up there. So, hey everybody, thanks so much for joining us. Honestly, everybody that is here, really thankful for you being here. This is our first in-person event officially that we've done, and I'm just super excited for it overall. We've been doing lots of events pre-pandemic, and obviously haven't been able to be in person, so it's really fun to be in person. Really fun to be with you, my fellow speakers here. And for everybody that's listening and watching right now on the streams, we're streaming right now on YouTube, on LinkedIn, on Twitch. Where else are we streaming? Airmeet. Thank you so much. We're going to keep this as interactive as possible. We have Ross behind the camera right now, and he will let us know when people have questions, and we'll even invite people onto stage to talk. And some of you in the audience here live, if you want to come up and join in that conversation, we also want to invite that as well, because for us, it's really about, hey, let's have community. And you know, we're not the experts here. Yeah, sure, we have battle scars, like I'm sure a lot of you do too. So this is just kind of just telling the stories and talking about that. How's everybody doing?
How much is Bitcoin at right now?
Oh, you want to get straight into winter, huh? Yeah. You want to get straight into winter. So what we're going to be doing tonight, and what we'll be doing in this show, we're talking about Tales of Crypto Winter. I don't know if you know this, but Bitcoin has been chopping right around like the 30,000 mark for the last couple weeks. You know, there was an all-time high of, what was it, at 69,000? That was in November. Yeah. Is that right? Yeah. So we're at less than half. For those of us that love Bitcoin, that see the future value of Bitcoin, etc., like, don't get me wrong. Of course, I'd like to see Bitcoin higher than it is right now, but I think of it more for its long-term value. I have a 10-year time horizon the way I think about it. But for those who are kind of new to this stuff, this is pretty confusing, right? This is pretty like, whoa, like what happens? And I'm sorry to get right into it. Before we get into it, let's just do a quick round of introductions. We have our incredible special guest today. That person, we were just kidding. David from Stably, CTO of Stably. Thanks for joining us. How you doing?
Good. I'm glad to be here.
Yeah, me too. We've known you for a long time, since 2017.
Yeah, not many people have survived all the crypto winners to get to where we are today, but glad we made it this far.
Yeah, definitely. You want to just give a quick intro?
Sure. So, my name is David. Ooh, I'm a co-founder at Stably. So Stably focuses on what we call stablecoin infrastructure. So, let's pretend, for example, you're launching a new blockchain protocol and you need a US dollar stablecoin. We help provide that. Or let's say you're an existing stablecoin that wants better on and off ramps to your end users. We also provide that as well. So our long-term vision and goal is to make that line between your bank account and traditional finance, to your non-custodial wallet and stablecoins, like as kind of non-existent as possible, right? So that's the high-level summary. If you're interested in learning more, website is stably.io.
Awesome. Thanks, David. Just a quick plug. We do have our conference coming up on June 1st. It's the TF Blockchain Conference. The reason I'm plugging it right now is because Stably has actually been a sponsor of every single conference we've ever done from the very beginning.
How about that, huh?
Yes. Thank you. So we super appreciate you. We'll be having Corey Hong, who is David's co-founder and CEO. He'll be speaking at the conference as well, and Stably will have a huge presence there. So we're excited for that. Also, you guys have a pretty interesting announcement in the fact that you have a partnership with Harmony. And yeah, share that real quick.
Yeah, so Harmony is, the latest in the line of blockchains we've, worked with. So we're super excited to bring US dollar-backed stablecoins to Harmony. we're super excited to work with their different wallet partners and, DeFi applications within their ecosystem. So, we really believe that by lowering this barrier to entry into all of these different DeFi, protocols and different blockchain ecosystems, will really help make crypto a lot more accessible, and especially in this case, the Harmony ecosystem a lot more accessible.
That's awesome. That's awesome. Well, congrats again on that. And Mike, I'd love if you introduce yourself. And there's a Harmony connection that maybe you can also mention on our side.
For sure. So, hey, everyone. I'm Mike Morgan. I'm with TF Labs. I'm the Vice President of Operations and Partnerships for Nifmint, a spin out we have from TF Labs, which is NFT commerce infrastructure for brands. And we are really excited because we too have a partnership with Harmony, a grant to bring our NFT commerce infrastructure to the Harmony blockchain ecosystem. And I think we're really excited about Harmony because the growth in that industry has just been phenomenal. The number of people starting to build on Harmony. And I think that they don't bring a lot of the baggage that some other L1 blockchains have. And so we're just tremendously excited to be working with Harmony and think they're a great partner. And, we're excited for people to be using the stably stable token in our NFT commerce infrastructure on the Harmony blockchain. And so,
well, we also, anybody who attends TF blockchain conference on June 1st will be getting a conference NFT, and those conference NFTs will be on Harmony.
Yeah, so, really excited to launch those.
Yeah.
So.
And last but certainly not least, Mr. Crypto Twitter himself, Matty Sats Case, crypto media personality and just all around great guy.
I'm excited to be here, man. Thank you guys for coming here. The first one, this is a beautiful space and a beautiful first of many. Crypto winter. I think, David, you really summed it up. Not many people have made it and survived to get here. And the fact that we're here and that you are here and that you're here says a lot about the community and the strength and the resilience of it. And so I'm excited to get into this, to hear your stories, to hear your experiences, to hear maybe how you survived. Well, how did you stave off the frostbite, So, yeah, it's good.
You know, what's fun for us, having been in the space for as long as we have, and a quick thing for people out there, what we love to say that working in blockchain is like dog years. And so on stage, you've got over 70 years of working experience.
I've got the great
blockchain experience. But when we went through Crypto Winter 1, we saw
hold on, Rogan. Technically not Crypto Winter 1.
Our first Crypto
yeah,
Winter.
Let's clarify.
I passively watched Crypto Winter 1.
There's some legends in the space. We're still big. We're like, call it teenagers, right? Like if you think about it, because I got in 2017. 17. Yeah. So I guess we're the class of 2017 crypto. But of course, there's been people who've been laying this foundation down.
Long before us. So
and there's been some winters before that, of course, right? But we're kind of going to relate this back to the most recent, frankly, because there's some parallels here and kind of how the market's been behaving. But sorry, go ahead.
So for us, when we saw our first crypto winter ourselves working in the space, we saw Bitcoin go from 1819 down to
32.
Yeah.
The lowest was 32.
It kissed 20K, and then had to sit on 34 or something for a little bit.
And so perspective from us is we're teetering this $29,000-$30,000 threshold right now, and if we told that to ourselves 4 years ago, right? We wouldn't be.
Well, I love the memes where it's like 30K in like 2020. Yeah, it's like super happy. Like 30K now. It's like
right. Like when it hit 30 going north. How do you feel compared to when we saw Bitcoin? Because again, we have that kind of experience of we're way ahead from where we were 4 or 5 years ago. But
yeah, you go, David.
Yeah.
I mean, I think a lot of it also depends on when you got in, right? Like for a lot of the people that have been in this space a long time, a 50% drawdown in Bitcoin may not be a huge deal. But if you kind of been dabbling in the space and you decided to finally take that leap of courage and get in at like 60K or whatever, then you're not feeling great, right?
Yeah.
And I think this is the pattern that plays out every cycle, right? There's always kind of more people that adopt on the tail end, and then they kind of feel the pain first.
Yeah.
So, I wouldn't say that this is not a big deal, right? Like a 50% drawdown is significant, but it's certainly not what I would consider out of the norm for crypto and Bitcoin.
Yeah, I think what's interesting about that too, again, relating it back to my first crypto winter, is I was freaked out back then. When it went from 20K and it just kept going down, I'm like, why is this happening? And right now I'm not scared at all, right? So, and I remember meeting people or knowing people who had been around in prior crypto winters, and they're like, what are you worried about? You know what I mean? So yeah, I guess for anybody who's new to the space at this moment in time, my point of view is always about what is your time horizon? Like what are you thinking about this? Are you a day trader? If you're a day trader, you actually probably know how to make money when it goes up and down anyway. So like, you're not really worried about it, right? But if you're someone that's trying to do a quick flip or so forth.
If you bought Dogecoin at 18 on Coinbase because you thought it was going to hit $1,
yeah,
right?
But like, the economics of Dogecoin hitting $1 are
my gosh,
very difficult to happen just from a market cap standpoint, right?
Almost
so,
impossible. And so,
which I'll let someone else who can talk to the finance sides of that, jump in on that. But it's, the total market cap of what Doge would have to equal for it to be worth $1 is astronomical.
Yeah.
So anyways, Matt, thoughts? Just go for it.
Oh, thoughts overall. Yeah, just like I think what David said really is on point, because you kind of really got to be in this space, I think, for one full cycle. And I think once you've been in for one full cycle, you understand the process, what's involved. You've understood after that full 4-year cycle, you've understood, basically what the layer 1 blockchain, how that works. You understand, okay, private keys after a full cycle, you should be able to self-custody. So if you've been in that point, like a lot of us, like we had to eat the pain. I had to eat the pain, and you know what? I bought, and I'm very fortunate, I bought at 3,400. And then I went on a boat on Lake Washington and I lost my wallet. So don't ever do that, because that's one thing you want to learn. Don't take your wallet with you on a boat.
That may or may not be a real story, but
anyways, but all that being said, though, seriously, I think that this price action that we're seeing now is reminiscent, like you said, of that people will look back and go, oh, wow, you bought in at 3,400. Holy moly, right? Now people are going to look back as when it's over 100K and go, oh my gosh, you got in at 29.5. Oh my, that's insane, right? And so
when Bitcoin goes back down to 100,000,
yeah.
right?
Yeah.
and again, you're going to have all these mainstream publications saying that's Bitcoin's dead.
Bitcoin's dead.
Bitcoin's dead. It's back down to 100. It's under 100,000. Bitcoin's dead.
Yeah.
Blockchain's over.
And so I think it's just the bottom line. You never go wrong. And it's my words I'm going to live by. Be smart. Be safe. Stack sats and hodl, and you never go wrong. Okay? No, you never go wrong, because if you're just stacking sats and you're using pre-tax dollars, you're not getting taxed on it, right? And you're holding it in your own self-custody, right? So that's great. You can't go wrong with that. And guess what? You're not going to get scammed by some crazy algorithmic stable coin. No offense. But you know what?
No, he's not algo.
I know, but I'm not trying to bash him. And so, but you know what I mean, though? So if you just self-custody the one thing, the pure asset, bros, friends, people around the world, wake up to the awesome opportunity that we have right now to seize self-sovereignty and become your own bank.
Hashtag not financial advice.
Yeah, I was just gonna say that. Let's go down the line and see who's giving us
Hashtag not financial
advice.
How many times does that come up? You have to drink, okay?
Yeah.
Okay, cool. Well, I feel like we've warmed up here for a second. So I think a really good place to kind of just come from and think about overall is let's start out again, last crypto winter. Talk about that a little bit. Some of the factors that took into place. So we're like in November, December 2017. basically just like $1,000 ups, daily essentially, right? And then we get
It was
to
insane.
yeah, and then I think it was like December 16th ish is when it hit 2020.
I
or
remember
20
the day.
I remember the day
16th?
too.
I remember the day. I was like, this feels like Bitcoin top, and everyone called me crazy. They're like, Bitcoin's gonna hit 100K this year.
Yeah.
John McAfee said so.
Yeah. Well,
Yeah.
how'd that work out for him?
Yeah, rest in peace. So walk us through that. What were you thinking back then, and kind of and I guess even relate that to your personal crypto journey and what you're doing with Stably and how that affected it.
So I guess a little bit of background first, and like Jonathan said, none of this is financial advice. So please talk to a financial advisor before you make irresponsible decisions. But for me, I've always had an interest in financial markets. So even before crypto and whatever, I was trading stocks, options, all that sort of stuff. And I've always been interested in, like technology innovation and like the adoption cycles. And for me, it was very obvious that, for crypto to succeed, it's going to have to go through many S curves, right? It's going to have to go through periods of boom and bust until we kind of get to a point where there's actually, significant traction and end user adoption, right? It's kind of similar to how, people thought the internet was a scam until it wasn't, right? I don't think anyone today would be like, oh, the internet, there's no value there, right? But if you, talk to people from like, the 80s and 90s, you'll get tons of people that say that. So, I think part of the ability to have conviction in a space is to truly understand like the first principles and the foundational assumptions, right? If you truly believe that, blockchain and crypto unlocks some sort of capabilities that add value to the world and is not, you're not able to do it without this technology, then that's a reason to be long-term bullish on the space, right? So of course, do your own research, make sure you understand why you're investing in something. And at the end of the day, if you do have that long-term time horizon, if you do, look 10 years into the future, right, it's much easier to be able to stomach some of these downturns, right? Like I sometimes draw like a parallel to investing in like index funds, right? Like if you believe that the world will continue to exist and continue to operate and grow, then index investing is a very safe bet because you're basically betting on the continued survival of the human species, right? in a similar way, right?
Long on humans.
Yeah, long humans, right? In a similar way, you can kind of look at some of these like, more like safe haven crypto assets like Bitcoin or Ether in a similar way, right? If you believe in the long-term success of the space, at least for now, right? These look like relatively safe bets. So not financial advice, but
A really good life suggestion, though.
yeah. So that's kind of the perspective I would take, if you're looking at the fundamentals rather than, just trying to make a quick buck.
I had a what I think of as like a building paradigm question I wanted to ask you too is when I first came into the space, business development was guided by three letters. I, C, and O. And that was the structure of the blockchain. We didn't call it Web3 then, but Web3 ecosystem at that time was.
Builders were calling it Web3 though, interestingly enough. Like that's kind of the fun. Sorry, I didn't mean to cut you off, but like people building software were calling it Web3, but no one else was, and then call it last year. People from a marketing standpoint, it's Web3 right now. Sorry, keep going.
But that was how you ran a Web3 project. If you had an idea, if you had something you wanted to do with this cool new technology that there was now increased accessibility to build on top of or integrate with, you did an ICO. And that for those who it went well for, it ended up going terribly in the long run. For those who it went okay for, it also went terribly in the long run, as you see token prices spiral and companies can't support the demand and everybody's calling it a scam, and you end up failing out that way. And interestingly enough, I think for a lot of companies that they ended up pulling their ICOs or not doing an ICO worked out really well for them in the long run if they're still around today. So I'd like to hear your guys' thoughts on, again, that was in 2017, that was the paradigm for building a business. How do you build a Web3 business? Oh, you ICO. Today, radically different.
Well, I mean, I'll even start with, so I found out about Bitcoin in about like 2013, 2014, because a friend of mine was using it for, I don't know, like gaming and stuff like that. And I thought it was stupid. I was like, whatever. I didn't care, which obviously I'm the stupid one. Right? And so, I've been into startups for quite a long time. And the ICO grabbed my attention. So in 2016 and 2017, start to notice these different ICOs. And I'm like, holy crap, like this is a fundraising mechanism.
Not only that, it's like, it looks like they can't fail.
Yeah,
right?
So it looked really interesting. So I started investigating it myself. I'm like, how does this work? I was like, oh wait, I can, print magic internet money and I can, set whatever I want to it and I can find all these people to buy it. Like, this is really interesting. Thankfully, I looked into it a lot further and I was like, oh wow, like these are actually securities. And these are things that, probably shouldn't do because you're starting to talk about, some future value type of stuff. So,
will you tell them like what an ICO, just in case anybody watching doesn't know what an ICO is? This is core to understand about.
So an ICO is an initial coin offering penned after an IPO, or to sound similar essentially. One of the benefits, call it, of Ethereum is the fact that you can essentially create tokenized, economies, tokenized software essentially. There's pros and cons to that, right? And like any new innovation, sometimes there's people that find what works best for them, but might not work in a legal construct. I think that's really what happened, in the ICO, phase overall. And I do think that there were good projects and people that were trying to do things. One thing that we talk about a lot is most rug pulls, I really don't think come out with the intention to be a rug pull. Maybe they want to make money. Maybe they want to, they think it's going to be infinite up. But then they kind of realize, holy crap, like this is hard, I'm out. Or like this is, and that hence becomes a rug pull, or they're so dysfunctional that they're not able to, follow through with whatever they're looking to do. And are there bad people? Of course. Are there people taking advantage of people? Of course. But anyways, long story short is, so you had a lot of people, if you were in blockchain or crypto, and I shouldn't say if you were, the perception was that if you were in blockchain or crypto, like you were doing an ICO, and you would talk to investors and they'd be like, if they're traditional investors at least, they'd be like, oh no, I don't want anything to do with you. Which is actually really funny because since middle of 2020, like all these investors now are like, oh, we're really interested in Web3 and blah, 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 and like NFTs and all this stuff. And there's some elements of that look ICO-like, of course. Long story short, though, is, that's what an ICO is. For those who don't understand how securities work, I'm not a lawyer, not legal advice, but there's basic things that you have to make sure look up the Howey test, but without getting into what the Howey test is, as simply as it can be, is you can't promise future value to people from an investment, and you can't basically offer equity or something that appears or looks or acts like equity into your business without registering it as a security, and that was in fact the issue.
Mm-hmm. So I think what did we apart from just the legal side, what did we learn about ICOs in 2018 and why is almost nobody doing them today?
I just heard of one like the other day and I like couldn't believe it.
That's why I said almost no one.
But
it's
either you guys.
I mean, I wouldn't say that ICOs are dead, right? They kind of just have taken a different form.
Yeah.
People aren't explicitly selling tokens directly anymore. But I think tokens as a fundraising mechanism is still well and alive, though I think investors, both retail and institutional, are a lot more savvy about what they put money into, not just the next nice white paper that comes around, right? When I saw what was happening with ICOs, I'm like, this feels like, PowerPoint presentations in like 1999, right? It's like, if you do you have .com in your name, do you have a deck? Here's some money, right?
Yeah.
The 2018 or the 2017 version of it was, do you have a cool looking website and do you have a white paper? Take my money.
Yeah.
And I think, this goes back to the boom and bust cycles thing, right? Like, I think there's bound to be a lot of irrational exuberance when it comes to any new and exciting technology, but separating the real projects from the less real projects, it takes time, it takes education, it takes lessons learned. People have to, go through this and learn the lessons the hard way, really, in order to filter out and get the real value out at the end, right? So I think we'll continue to see this sort of cycle happen for Bitcoin and crypto and, Web3, whatever you want to call it. And you see this in pretty much every industry, right? Like in 2012, 2010 or whatever, 3D printing, right now it was Web3 maybe like a couple of months ago. Who knows what the next one will be, right?
No, not this topic, or sorry, not for this chat, but I think we're going to see like a metaverse bubble.
For sure.
I do believe in the long-term value of the metaverse. Want to be clear on that, but I really think that's going to be a bust cycle here.
For sure.
The money, same thing with ICOs, same thing with NFTs, and probably going to be the same thing with metaverses. Is money floods in because it doesn't want to be left out on these incredible returns opportunities. The underlying value that industry represents cannot support that elephant of money sitting on top of it, and then it all falls apart like a house of cards. I mean, that's 100% what we saw with the ICO craze leading into.
And Matt, I'd love for you to chime in, but I would say that, and we also have to be super clear that there are big whales that move markets, that operate on information that other people don't have.
Yeah.
That can cut trees down, basically, right? Yeah. So that definitely happens. And
Matt, yeah, you know way more about that world.
About what world is that?
You're
cutting down trees. I'm a logger. I cut down trees. I'll come to your house.
Well, you're like one of the best known whales, and
oh yes, one of the best known whales.
Well, crypto whales are able to move the market in a way that typical consumers, participants, call them what you may, couldn't do, and oftentimes are on the tail end of the whipping roller coaster that these whales kind of induce in the market.
Sure. Yeah. There's no doubt about that. They definitely are out there. They move, and they even have their own. I think there's even Telegram groups I've heard of these folks who actually communicate. So this is a fact. They're orchestrating. Things are going on. It's not a conspiracy theory, but that's true. I think with people are exchanging ideas of any kind, or going to exchange ideas. Like we're all here exchanging ideas right now. The fact that we want to talk about the price of whatever it is, if we all went out and bought it, does that mean we're going to manipulate the price? Well, we aren't going to have that big of an impact because our footprint isn't like that. But if we're talking about I don't know, some institutions or big name private individuals, high net worth individuals, then yes, hey, you got that thing. Yeah, you think about one, then that can go down. And I think we saw a lot of that also happen with Luna. I mean, I think we saw even Dow Kwan was alluding to that, wasn't he? There was seems like a coordinated attack.
Yeah, let's go there, because I feel like we have people that know about this subject.
I feel like this has been the talk of the town for the past 2 weeks or so.
Well, one thing I loved is Corey, your co-founder, pasted a chat thread from 2018. Where they were talking about algorithmic stablecoins and Luna, right? And basically Corey was saying my CTO and we talked about this and we thought it was interesting at first, but then basically realized that it would never work. So we're, good luck to him type of thing. So you predicted it.
Tell everybody, here and watching online, sort of what the difference is between stably to stable coin and what we'll call algo coins.
Yeah. So I guess. So I guess before I kind of dive into, what are the differences between different types of stable coins, let me just throw out there that, personally, this is not representing Stably's opinion, but personally,
with the hat on.
I don't think that all algorithmic stable coins are doomed to fail. I think no one has yet proven to me that you can't succeed with an algorithmic stablecoin, right? I mean, in a way, right, the US dollar is an algorithmic stablecoin managed by the Federal Reserve, right? But for me, the challenge has been that a lot of these algorithmic stablecoin projects, they fail to address a lot of the common failure scenarios that, with the types of mechanisms that they implement, which I'll get into, that are kind of, I don't want to call it obvious, but, you don't have to, be a major in math to like really understand what's going on. And this story has kind of played out over and over again. So like, it started with like, BitUSD, Basis tried to do something similar. And then, Terra is the latest incarnation of that. So, but before I get into what that is, so people often use the term stablecoin to refer to a very wide class of assets. So stablecoins, when people say that word, they generally just mean any sort of crypto that's tied to a relatively stable value, right? So this can be, US dollars, other types of fiat currency. Some people refer to gold as like a stable asset or whatever, right? But the way that this stability is maintained differs widely between different types of stablecoins. So the two dimensions I like to use to look at stablecoins is like centralized versus decentralized, and collateral backed versus game theoretical. So Luna, Terra Luna, this kind of, dual token system is what we would classify as a decentralized game theory backed stablecoin, right? So the way that it works is it relies on some fundamental assumptions about greedy market participants, some sort of, it relies on some well-tuned parameters about how much supply and demand might increase on like a day-to-day basis. And this model works great in theory, right? But in practice, the world doesn't behave rationally all the time. There are potentially, attackers or bad actors out there. There are negative externalities like, macroeconomic events, like the whole crypto market going down, for example, right? And these kinds of things are usually not modeled for, right? This is kind of what caused the 2008 housing crisis. This is what caused the failure of long-term capital management. You have all of these very well-tuned assumptions, and, you have a bunch of people sitting in a room being like, if these assumptions hold, we're all billionaires, right? But the issue is those assumptions rarely hold in reality. And the way that these types of projects usually fail is that they fail to account for a negative feedback loop. So in the Terra Luna case, what happened was basically, there was a large depreciation and large selling pressure within the crypto ecosystem, but, specifically within the Luna token itself. And that caused a lack of confidence in the Terra USD holders. So they started to sell on the market. But the whole system has this mechanism where if a lot of people are trying to sell, Terra USD at once, the system prints more Luna to buy up that UST.
And that's what we saw when they printed all that from whatever. There was
Exactly.
just a mammoth amount in that short amount of time.
Exactly.
And
yeah.
that spooked a lot of people as well.
Yeah, and
Like
it should.
6.8 billion or something, wasn't
It
it?
should spook a lot of
Yeah.
people, right? And the reason people get spooked is because people aren't stupid. They see there's a negative feedback cycle that's about to happen, right? They're like, okay, wait a minute. So you're telling me that more people are trying to sell UST, which means more Luna needs to be printed, which means the price of Luna is going to go down, which means even more Luna needs to be printed to satisfy, the new demand.
And that's that negative feedback.
Yeah, and that's the negative feedback loop, right? Like kind of like what you mentioned. So Luna, I think, started off with like 260 million or something total supply, and yeah, it wasn't just 6-7 billion. It was, I think, like more than $1 trillion.
Oh, was it? No, okay.
So,
since the news has been updated now.
yeah. So this, it was basically hyperinflation in real time, right? Over the course of a week, you saw the collapse of of an entire ecosystem.
Let me ask you this: is this potentially a microcosm or an example of what we see the Fed doing with the U.S. dollar?
Okay, yeah. So I'm gonna tread very carefully with my words.
We appreciate the U.S. government. Thank you for what you do.
Yeah. So I guess let me call out the clearest difference between UST and like Federal Reserve issued dollars, right? So unlike Federal Reserve issued dollars, UST, like the ecosystem was very self-contained, right? Like people used UST within the Terra Luna ecosystem and maybe a little bit on some other chains, right? But for US dollars, you had to pay your taxes in them. You go out and you buy your groceries in them. This is what your employer gives you, all this sort of stuff.
It's the global reserve currency.
It's the global reserve
post
currency.
Bretton Woods era.
Yeah, it's what oil's traded against. It's
Yeah.
the world's energy currency, basically, right? There's a lot of things riding on the dollar. So it derives a lot more collective confidence in that regard, right? So, is it possible that the dollar loses its dominance? Definitely, right? I think one of the biggest challenges for the U.S. going forward is maintaining that dollar dominance.
Mm-hmm.
Especially, I don't want to bring up Russia and Ukraine and derail us too much, but especially since we're starting to see the government weaponizing the dollar, right? It's going to polarize a lot of countries, whatever, printing money to combat the recession or downturn, whatever you want to call it, from a pandemic type of situation. There's a lot of factors that make people scared. I can't really say that I can predict the future, and I don't think anyone can. And if they tell you they can, then they're probably trying to sell you something, right? But I do think that...
Or they're from the future.
Or they're from the future, yes. Though I have yet to meet someone actually from the future. But, there's definitely a lot of factors that are going on right now. And I think this is also, so going back to the original topic, this is one of the things that also spooks the crypto market. People believe that if people are sort of de-risking, they're exiting their stock positions, they're, getting into cash, whatever, these same people are also going to de-risk their crypto positions, right? That's why we see such a big correlation or, beta in market terms between Bitcoin and the S&P 500 recently, right?
However, though, Bitcoin has retained it. That just recently in the markets, I think we've seen though, versus the S&P and stocks, it's actually it's faring.
Yeah. So the other side of the thesis is that crypto and Bitcoin is going to be this inflation hedge. It's going to be, a value preservation asset. It's the new digital gold, whatever. So there's a lot of different factors that kind of fight against each other. And that's why it's hard to say what's going to happen, right? Like there's no guarantee that it's going to be a bad scenario or a good one.
Well, one thing that's interesting about where we're at in the market today, essentially, is in early 2018, there wasn't a global massive macro event or multiple macro events taking place at the same time that was putting downward sell pressure. So
we were on a ridiculous run.
Yeah,
run.
We're 13 years, 14 years since the last recession. The longest time since a recession has taken place, right? So a lot of people in crypto don't even know what that word means because they haven't experienced that, right? 2008. So it's interesting. I think that is what makes this a little bit different than 2018 is just that, right? But I personally, I'm kind of encouraged about the fact at this moment in time that we have that there is a slight parallel with global market, right? Because I do believe that there will be a decoupling. Of course, everybody would prefer, there to be that separation, of course, going the opposite way. But I think there was also other people that had the assumption that crypto and in particular Bitcoin might, go in a further downward fashion. Obviously not those of us in Bitcoin, but call it people in your traditional markets overall.
So I just a question for the group, and this is not financial forecasting at all, but having been through the previous winter, do you think that this winter will be as long and hard as the previous one?
So I'm always wrong.
All right, so do the opposite.
I am always wrong.
So yeah, please say it's going to be a long, hard, cold winter.
Wrong when it comes to when people should buy or not buy. So definitely I shouldn't be giving financial advice.
And you're not.
And I'm not, of course.
It's just a life
Just
suggestion.
a life suggestion.
Life suggestions.
I personally think that we have more. There's going to be a little bit more hurt. Like I think that we're going to see Bitcoin in like the 18, but I don't think it's going to be for a long time. And the reason I think that is because I do think there's still a parallel to global market, and I do think that the global market is going to be affected. So if global markets improve somehow and all of a sudden stocks go up as well, then of course I think there's going to be parallel there, and maybe there's a takeoff point overall. But I just think that we're just at the very beginning phases of what a recession might look like. And so, in fact, I don't think we're in a recession right now, technically. Like we're like at the starting point. So that's why. All that to say, though, you can never price the bottom. You can never time the bottom, and anybody who can, like, high five to you. But like that's you know that's yeah.
We'll follow up with a high five.
34. I mean, come on, that was pretty good.
That was pretty good. But like, you know, and so again, when it comes to that, it's, you know, what's your time preference? What's your time horizon? You know, a lot of people recommend dollar cost averaging. There's great products to do that, like our friends at Swan Bitcoin, Corey Clipstein. You have Cash App where you can do dollar cost averaging. I think you can even do it in Coinbase now, right?
Yep.
Most of them have that.
Most of them have, yeah. So yeah, it's just, again, but if you are going to be purchasing anything because you want to sell it in right away, yeah, you have to think about where that works for you, also.
So if you're building a company right now, you're getting your company up off the ground. What is something that you wish someone had told you going into the previous crypto winter that you could tell them, right? Like, what's a big lesson that
all right, wait, actually, before we move on, I actually want to
yeah,
take the flip side of the coin.
Yeah.
Okay, great.
So I want to add some positivity
Good.
to this. So, you know, of course, not financial advice, but if you look at, you know, a lot of the sort of longer term metrics, you know, like one of the popular ones is like the Bitcoin rainbow chart, which is just like a log regression of Bitcoin prices historically, you know, charted against the different halving, you know, events or whatever.
That's great.
So,
Metric.
so, you know, not saying that it's going to remain accurate, but if we're actually near a bottom, you know, I wouldn't be surprised if we've already seen the bottom.
I hope you're right.
I hope I'm right too. And, you know, the reason I have any amount of confidence in this at all is because historically, you know, these types, like I think crypto is still early enough that, you know, these types of trends still have quite a bit of room to persist before we finally reach stagnation. Like, I don't think we've actually reached the point of mass adoption for Bitcoin.
Nowhere near.
So, you know, that's one reason to be optimistic. Though the flip side is, of course, you know, if like World War III breaks out or if we get into a long-term global recession, no amount of, you know, technical analysis, you know, magic pixie dust is going to be able to save us.
Yeah, and that's the point that I come from. Is right. It's like I'm thinking that we are going to get into a big global recession.
The term I like to use, and I started throwing it around back on 2018, 2019, was global inflationary recession. The analogy that I used was the economy is the Titanic, debt is the iceberg, and Bitcoin is the lifeboats. And there's only so many people that are going to be able to get into the lifeboats like Titanic. Most people on the Titanic didn't think it could sink. Most people don't think this economy is going to sink. Most people are like, oh, the band played on, and the smart people, they're heading for the exits. We're getting in the rowboats, Rose, and they're still standing. And you know what? Gee,
Well, first off, how did Rose let Jack just sink to the bottom? There's totally enough room. There's enough room on that.
Because he
on that
wasn't a
board.
Bitcoin maximalist. That's why he was.
I think
Yeah.
one thing that
Model.
David has brought up, though, is when you look at the period of the halving cycles, right? It goes back to being in those cycles. But I think what we have not seen, I guess it's going to make this, I hate the phrase, this time it's different. What is unique coming up here, though, is we're facing another halving in 2024. We're also facing a major presidential election. And I think that the awareness just across society, across the world. With Bitcoin, that adoption is going to increase. And I think Bitcoin is going to become actually a major political issue. It's going to be, especially when it comes to Bitcoin mining, I think that the state is going to really take a hard look at this, and they're going to start regulating it in a big way. And almost the state, it will become an issue of national security where, the state will say, you can mine, you can't mine, and you have to jump through all these different hoops and whatnot. Or maybe, that's
well, and I mean, look, there's people who have done very well for themselves in crypto who perhaps own exchanges who are actually donating to different PACs for this next cycle of election. So yeah, you're right. Bitcoin is definitely going to play a major factor.
$11 million to a House candidate in Oregon.
Yeah, and he lost.
Who lost?
Yeah, I saw that. FTX donated that. Yeah.
I wasn't going to say who, but.
Oh, well, sorry, FTX.
But what's really
It's just news. I cover the news. That's not.
But look, going back to, our side from the tech and when we're thinking about this, you have Jamie Dimon basically saying that Bitcoin network might be better than the existing financial network for sending payments, right?
It's the same thing as,
So
I've watched every 2008 Financial Collapse movie available out there, and all of them have the same thing that
There's more than one.
oh my gosh, The Big Short. There's the one with Zachary Quinto, Margin Call, is great. So that's one
Okay,
of the
I've
ones.
seen those two. Yeah. Okay.
I'm sure I could think of maybe one.
Okay,
more.
so
but,
there's
but
one more
irrespective,
than one.
it's the same all the way across. That people will mark things negatively until it's in their interest to mark it positively, and we've seen that with Jamie Dimon so hardcore of. It's a scam. It's a fraud.
I'm firing anybody who in my company who works with or touches it, right?
Absolutely. Well, actually, maybe.
No, I mean, for Jamie Dimon to say that, hey, like this could be a better payment system. Like, what happens? Everybody talks about Bitcoin hyper Bitcoinization when like all of us are just sending Bitcoin back and forth or whatever. But like when banking rails uses Bitcoin network, like that's pretty interesting. That's pretty interesting. So that I think that would be a very strong positive for that. But we'll see what happens overall. I would love to invite anybody in our audience, and all you way back there, if you could just start making your way down.
Yeah, got people on the balcony.
Yeah.
Single file, one at a time.
Yeah, no, slow down. Okay. But anyways, if anybody wants to come up here and just chat and hang out,
I'm going to open up a chair so somebody can come on up.
hopefully they do. You can either ask the question or share your story or share kind of your thoughts. It'd be interesting to hear your thoughts. Ross, do we have anybody online that might want to come up too? Please feel free to invite them. What's that?
Nobody wants to step up.
Oh, no one wants to step up. People are scared. But this is where it works out poorly, is when you invite everybody and no one says yes. So, but Matt, can you come back? Because this I feel cold now.
Now you feel cold. All right. All right.
I do want to kind of return to the question, because this is, in theory, it's Tales from the Crypto Winter. And so I would just love to hear, though, that sort of, for anybody building a company, getting into the space now, anybody who is where we were at as the class of 2017, going into our first winter, what's something that you wish someone had told you then that you really took seriously, or something that you knew? If I could say for me really quick, my big one is focus on building traditional revenue behind the business to feed any kind of NFT program development, crypto program development, Web3 program development you want. But don't let Web3 be the horse, because it's not. It's the cart, and you got to have you have to get to a point of that standing on its own, and to get there, you have to do steady revenue, make what you can, and build off of that.
I mean, I think it also depends on what kind of business you are, right? Like I would give like a Web3 company very different advice than a company that maybe has, a foot in traditional business and a foot in Web3, right? I mean, I think the most generic advice I can provide is, bear markets and downturns are a great time to hire people and build things.
Mm-hmm.
So, during bull markets, everyone's at conferences, everyone's having fun, everyone's watching their, crypto prices, and they're like, wow, I'm paper rich, right? But it's really, these downturns that kind of separate the things that have real value versus the things that, are only sound nice on paper, right? It's kind of like, the economy's way of like, how do I put this nicely? Of like purging excess and purging waste and, discovering.
Kind of separating the wheat from the chaff.
Yeah.
It's a filtering process.
Exactly. So, I mean, my only advice is, if you have the means and you have the conviction, then nothing fundamentally has changed, right? The only thing that's changed is how many people, were kind of just in it to like bandwagon and because of FOMO, right? If you really have a long-term vision and if you have, data and good evidence that indicates that what you're doing will provide long-term value, then nothing's changed, right?
Mm-hmm.
I think it depends, what type of individual you are. If you are like, hey, I want to be in Web3 and you are not a founder, so you are going to go work for someone, I would recommend that you really evaluate like what style of employee you are. Are you someone who likes to work at startups, or are you someone who needs a little bit more security? So if you need a little bit more security, there's plenty of really large Web3 or in the ecosystem type companies that have either IPO'd or close to IPOing, or are exchanges, so they have tons of revenue. If you're coming from, call it top type of tech company, you might want to transition into something like that, right? Because it's going to feel more similar to what you're used to. If you're a startup person already, I think there is really some interesting opportunities to join a startup in the Web3 space. I'd be very careful though of who you align yourself with. So look, everybody has to start somewhere. And I'm a big fan of like first time founders and those sorts of things. But aside from Stably, there's not too many like first time founder, because you're a first time founder, right? Like first time founder and then also Web3, like that's just really hard. If we all just decided like, hey, I want to start, I don't know, selling a t-shirt company, that's really hard. If you said, I want to start a restaurant, that's really hard. If you said, I want to start a startup, that's really hard. A startup plus Web3, I believe, is probably like the most difficult thing that you can do. So if you're early stage, like I would say you really just have to make sure that you can trust the founder and there's something to show for it. It's not just like smoke and mirrors or vision. Like I would not join a startup that's pure vision if you are joining an early stage startup, unless it's pure vision of someone that has had some sort of background that you can, like they've had a success or something.
Yeah, like something like an A16Z. I mean,
and they've got money to
viability.
Yeah,
that's fine.
Exactly.
Totally.
That's, well, I mean, you could maybe even argue. I could argue against that, but yes, at the very least, that. Now, if you're a founder in the space, I think it's also very similar. It's like, money has tightened up now. So if you don't have the Web3 experience, just know, it doesn't mean that you can't do it. Just know that you're going up against other founders who have been doing Web3 startups for a number of years, who have been doing this sorts of things. So again, it doesn't mean that you can't find success in doing it, but to Mike's point, make sure that you're solving a problem. And in a perfect context, it's not all vision, it's what you're solving for is better than the alternative. Not to plug what we do, but I have 100% conviction in what we're doing at NIFT that what we do is better than the alternative. So for example, yes, NFTs are PFPs and these sorts of things. What we do at NIFT is we allow brands to sell NFTs. And so when we talk to a brand, we say, an NFT for you is literally digital inventory. So you're probably selling digital inventory already. And it almost always is like, yes. It's like, okay, well, would you rather give away JPEGs and PNGs and password protect them? Or would you rather give away a file type that shows how many were created, the order in line, when it was created,
Provenance.
exact, etc. It's like what's the better option, and we believe that is a better solution than the alternative. We're at the beginning phases of that, of course. So those are the types of questions you have to ask yourself: is making sure that you're really solving problems, making sure that you trust that founder, and then also that you're learning. Frankly, like are you going to be learning or are you going to be earning? Go ahead, bud.
Well, crypto winter, right? But there's also an NFT winter. I don't know if I might have been in the bathroom when we were talking about it, but can you speak to that? Like, what do you think is there a long-term value to NFTs? What are the brands that you're talking to? What are their responses to your business model right now? And what do you think is the way out for the NFT space?
So that's a great question. So I think that there are various types of NFTs. I think what people understand today is NFTs as a PFP avatar. Like that's, if you ask the average person who would know what an NFT is, they'd be like, oh yeah, it's this, Bored Ape or CryptoPunks or Doodles. And those are fun and cool and neat. And there's really great communities behind them. And there's really great projects out there. I believe that is just one use case of all of NFTs.
A way huger industry.
Yeah, and so like I think that use case will continue to grow over time. Like yes, there's a shrinking there. I think that there will always be a place for that, just like there will always be a place for sports cards and trading cards and comic books and other type of collectibles. That being said, I believe there's a much larger opportunity when it comes to NFTs, and I believe that PFP avatars will actually technically become the smallest use case of NFTs. So you have things like what POAP is doing with proof of attendance, or basically using things like ticket stubs or certificates, etc. You have things like digital twins. So literally anything that has a physical, having a digital twin of that. And then you have things like really boring NFTs. I love saying that. Like I think boring NFTs are going to rule the world. And so, we're talking about things like either receipts, or we're talking about things like warranties. Imagine that you buy a dishwasher and you get an NFT that comes with it. I'm assuming there's probably people here like, Jonathan, you're an idiot. Who would want a dishwasher NFT? It's like, no. No one is buying a dishwasher NFT to list it on OpenSea and Wagner. no one is doing that. But going back to what I said a little bit ago, is it becomes better than the alternative. So if Whirlpool offers a warranty NFT that has an image of the dishwasher, for example, and it just happens to have the serial number in there, it has the warranty information in there,
the timeline of the warranty,
the timeline, like the history of like the parts, etc. And now it's just there. And when they provide it to the customer, maybe they don't even sell it. Maybe they just give it to you, or maybe
because that's now the expectation.
Because it's the expectation, or maybe it's just simply like, if you buy a warranty, that's the certificate of the warranty. And when they sell it to the customer, they don't say like, here's your Whirlpool NFT. It's here's your Whirlpool warranty. And that's the representation.
A great parallel is with Carfax, right? Carfax did an amazing job of the FOMO of, you're going to sell a car without a Carfax behind it? You got to have the Carfax to sell the car. Right. Well, guess what's the next Carfax coming down the pipeline? Is the NFTs of the cars, right? Is that kind of digital lineage of.
Now let's take it and add that to real estate and mortgages.
Yeah,
this is where things.
I don't see any value there. I don't see any value.
None at all.
And there's going to be people also listening who are saying like, oh, but doesn't it use like a lot of energy, or doesn't it, isn't that bad for the environment, or is it necessary, or does that information? And it's like, if everything remains the exact same way that it is today, and you believe that things aren't going to get improved over time or scale or et cetera, then maybe. But, the first computer was like the size of a house.
Yeah.
I can't imagine that the first combustion engine was very good for the environment. These things are going to improve over time.
What are you seeing with your conversations with brands now? Like, where's the big excitement coming from? Or is it more like, right now it's kind of wait and see until the market recovers, or is there setting the foundation for something bigger? Just curious about actual
Sure,
experience.
do you want to answer that?
Yeah, I'd love to. What's so interesting for us is that brands are actively coming to us to figure out their NFT go-to-market strategy, not because they think there's a lot of short-term immediate money in selling NFTs, and not because they think that the market's going to get hammered ad infinitum into oblivion, but because they see the long-term and perpetual, call it almost crypto market agnostic revenue capabilities of NFTs in a new product line. And what we talk a lot for brands about, and they just understand this so beautifully, is that it's this whole new product line that doesn't compete with your existing product line. It's absolutely complementary to everything that you do. And so for them, it's just this like ultimate natural evolution of commerce. And the last thing I'll kind of say on that is we've seen this huge value shift. Brands understand this too. We've seen this huge value shift generationally of people putting value in physical things into people putting value in digital things. So what we always talk about is ask any Gen Z kid what their most prized possession is. It's not going to be a gold pocket watch. It's not going to be, a familial ring or something like that, right? It's going to be maybe a photo they have of them and their friends, or it's going to be a really funny video that they really like, or a song they recorded, on their iMac when they were 13, right? Their most valuable things are digital, are things that they can never hold or touch, but yet they own, and it's important to them. And so brands understand this value shift and are so they're not thinking in terms of 6 months or 1 year or 5 year, right? They're thinking in terms of perpetuity for the big, and I won't say the name brands who we're talking with, unless you want to. I don't think we need to, but they think in so much longer terms than just this immediate quick flip, quick money that.
And remember that for a brand to survive, they continuously have to gain a younger demographic, right?
Mm-hmm.
So if you're a beauty brand, you want to get the kids who are starting to wear makeup now, right? If you are an athletic brand, you want to get the kids who are starting to wear running shoes or basketball or whatever, right? So like you're always getting this younger demographic. And so to Mike's point,
I want to ask you, what was the first pair of sneakers you ever had that you loved?
Because you look like a sneaker guy.
You look like a sneakerhead. For those of you who can't see at home, those are Yeezys, if I'm not mistaken.
Yeah. Man, it must have been a pair of All-Stars.
Yeah, absolutely. There's for a lot of people, there's this like love of what your first important item in a certain line was. I remember my first pair, right, of these.
Still wearing them.
Oh, yeah, I'm still wearing them. And brands really want to capture this zeitgeist, right? They really want to capture this ability to be the first NFT that kids buy, right? This first digital good in this industry that they only see continuing to explode over time. So there's a race among brands for two things: how to implement an optimal NFT product line. So like, what's the best thing that we can sell that are NFTs? Is that digital twins? Is that one more sales? Is it custom artwork, right? And then how do we optimize our direct sale, our DTC, direct to customer sales of these NFTs? How do we do it in our channels directly instead of going through intermediaries? So those are the two major things that brands are racing against each other to figure out and implement right now.
But what's interesting too is that a lot of these brands, like they know they need to do something, they just don't necessarily know what to do. So they're looking for solutions essentially, like what we provide. Well, I shouldn't even say that. It's pretty interesting how many brands we do talk to who come to us and they're like, we want to create a decentralized NFT that is in the metaverse that allows our consumers to get access and rewarded through a secondary token and then a stable, whatever. And it's like, do you know what that means? And then we explain to them what that means. They're like, oh, no, we don't want any of
No,
that.
no, no.
We don't want any of that.
You lost me at decentralized, right?
Yeah,
Everything
like,
else.
no, we don't want that. And it's funny because, like, you know, you have this notion, and something that I say often that people don't like me saying is that if you're a Fortune 100 brand, you technically don't need the crypto community to have a successful NFT drop, right? So there's this, I think that people in NFTs, I love you, but some of us are overly arrogant in thinking of like the impact or the effect that we have on like moving a market when you're talking about a $5.5 trillion e-commerce market, right? So the reason I bring that up is because let's say a big beauty brand wants to do a 10,000 NFT drop. They have millions of people in their database, millions of fans that they can reach out to. You really think they can't sell 10,000 digital products to their existing customer base? The issue now becomes how quote unquote like Web3 process do they want to make it? Do they want to, put some restrictions? Anyways, I don't want to turn this into like an infomercial for what we do, but you got me excited when we talked about that. Is there someone on stage?
I have a question from the audience.
Oh, cool.
It's a general question. I think each of you could take turns answering. What is one thing you wish you could change about the general public's understanding of crypto and the NFT space as a whole?
Oh,
Okay, I would honestly break that as two separate questions, right? So like,
crypto space.
yeah. So just in case audience couldn't hear Ross, it was, what would you do or how might you change the general population's viewpoint on crypto as a whole and as NFTs? So how about our esteemed guest?
Ooh, all right. So I'll tackle the crypto question first. Do we want to do one question at a time or?
Yeah, we'll
right.
start with crypto and we'll see.
So, I mean, in terms of crypto, I think one of the things that's, often a misconception is that like there's no value behind crypto, right? Like, people are like, like, why do I need this digital money thing, right? Like there's nothing behind it. It's not backed by anything. So as a US dollar backed stablecoin company, I'm tempted to agree with them, but like the reality is I don't agree with them, right? Like there's so many things in human civilization that have no inherent basis beyond our collective belief system, right? Like what is the value of, what's a government I can pick on? Like what's the value of like the US government, for example, right? It's just a shared belief that people around the world and within the US and, neighboring countries have, right? Like people believe the US exists and therefore it does, right? It's kind of the same idea with Bitcoin, right? Like in theory, you can take any digital asset or, it doesn't even have to be on a blockchain and people could agree that, this is now the new like medium of exchange or, store of value or whatever, right? But, what Bitcoin has managed to do is it's managed to capture so much mind share and prove that it's a reliable, consistent system over time, right? So that is the value of this belief system and some of the underlying mechanisms that reinforce it. So that's my crypto rant.
I would say to help just better educate the folks in general is just how money works. I think that's a big misnomer that a lot of people don't understand how money works, how it's created, and the system behind it, and what actually is backing their dollar. It's again the same thing. It's nothing's backing Bitcoin. Are you sure? Well, what's backing the dollar, right? So if we understand how money is created and all of that, that really gives you a greater understanding of why then Bitcoin is so awesome and the technology behind it. So I just think that probably we as a community do a better job communicating that. And probably not done the best job. And then there's also been like, bad people, there's just been, Craig Wright, sorry, I'm going to say his name, Craig Wright, but we've got to weed these people out. And I think this is kind of what goes back to David's point is these S curves, these cycles, we go through this process. We see these bad actors, we see these projects eventually get shaken out. So I think that just to get back to the addition of crypto is, really, if people understood how money was created, I think would be the biggest thing.
I can't believe you just called out Satoshi Nakamoto by name. Oh my gosh.
That's what I do.
No. Here's my big thing is I wish anyone who either calls it a Ponzi scam or calls it a use case for illegal drug money or calls it
Basically, what Ben Bernanke said yesterday.
the people who are so concerned about the environmental impact, anybody who's got something negative to say about the crypto space, I would have one simple ask. Go get a MetaMask wallet or a Coinbase Pro wallet or some other kind of wallet that you can have custody over yourself. Sign up for a test network, send yourself a test transaction, and just get to that point. Right, and then we can have a conversation about.
It's a big ass.
That's a big ask. I know.
It's not that hard. It's honestly, and one thing we're working on, I think more on the TF Lab side is creating this kind of really seamless education portal. And I always think of this in terms of what I call my mom test. And I love my mom more than anything else. And like using a printer freaks her out, right? That's like too technologically advanced. And so how do I take this and put it in a digestible, condensed level that my mom could super simply follow this through to completion? And I think if you can get to that point, which on the outside sounds kind of hard, but you don't have to know any coding languages. There's no consumer behavior that you don't already have, no skill set you've not already unlocked by the time of adulthood that will prohibit you from entering the crypto space. So just do the smallest actions inside the industry, and your I'll call it blockchain literacy will explode.
Yeah, and I mean, I guess for that, like, there's some other things that you can do. I appreciate that. I don't know. I have less faith that people can do those things.
The reason I say testnet is because I don't want anybody to lose any real money, right?
Sure.
You're gonna play pretend.
But I would say, like, even just like, having a friend of yours who you know, because you probably know at least one person who knows about crypto, sending you a link to join Cash App or link to whatever, so you get $5 or how much they do, or Lolly or Fold, where you can get cash back or Bitcoin back on some of these things that you do.
Yeah.
From the crypto context, I love this saying, and I feel like I made it up, but I don't know if I did. I'm sure someone else said it before me. And that is basically like, your lack of understanding doesn't diminish something's value, right? So just because you don't understand it doesn't mean it's not valuable, right? It just means you don't understand it. So if you come at it from that point, it's, how do you start to understand these things? So I think what we've been talking about helps and is a part of it. But I think people need to understand that not all cryptos are created equally.
There's Bitcoin and then there's crypto.
And there's, I mean, there really is.
It's a defining line.
There is. And like,
it really is.
No, but I do think so. I do. And I don't think that makes, I'm very pro Bitcoin, close to supremacy on that, but I do see all the value of why you would have crypto, because I really see crypto as in-network currency. And perhaps that's just like my point of view, because I've been in retail technology for so long. So if you have a strong network and there's a token involved, and that token helps reward the network, like, that's literally loyalty 101 of how that works. And, if there is limited supply or whatever, and then things go up as a result of it, or these sorts of things, or there's DeFi actions or these other tools to make it happen, where again, we're talking about utility within the network. So of course, like, that makes sense. And now you start talking about things, how like that can replace how existing systems, existing products, existing tools work, again, because it's better than the incumbent. So it's realizing that, I think the easiest way I would say it is understanding why things are used for different things, which might be a really tall ask, I guess.
Understand why things are used for different
understand
things.
why-
Tweet that out
all
right now. Ask you to
why
do is
things-
understand
No,
things.
yeah, so like,
About things.
yeah,
Understand things about things.
So
Okay,
yeah,
I got
so
that.
if you're interested in, I'll just stop. No, but look, even outside of like what people can do is like, I think most of us would agree is there just needs to be more application layer type stuff for the masses to get involved. Like, I call me wrong, but
Yeah, the
I
UX
never-
UI experience has
I
got to be
never-
made. A friend of mine and colleague says, trying to get your mom to learn how to do a ledger, like some James Bond type ish, right? And it just
Oh my
ain't going to
God.
happen. So again, we talk about that user experience, and one of the best. I'm not saying. I just think Cash App has a really great UX. Okay, my mom can even figure that out.
Yeah.
Like, okay, this is what we're talking about. It's like the consumer cellular, the phones with the big buttons. Remember, like that's the number 5. And that's my dad on it, right? They can do that, and that's what we need, right? And that's what we're I
No,
think
you're
we're
right.
seeing
It's
more and
Five
more
for
of that.
Bitcoin.
Yeah. Yeah.
That's why for Bitcoin.
Right. And like, I think, I don't think we'll ever get to over 50% of consumers or users managing their own private keys and private wallets. I never see that world.
Yeah. Sorry, Matt.
I hope to be proven wrong.
No, I know. I agree with you because there's a lot of inherent risk that comes with that, right? I mean, look, I even get sweaty still at this point. Thinking about the Ledger wallet that I had at the bottom of Lake Washington, that like if I were going to transfer money off that, I would still get nervous and sweaty, like, oh my gosh, right? There's a fear factor regardless, and people want that handheld experience. And what you're going to see, and this is already happening right now through the company NYDIG and Ross Stevens over there, they are already white labeling, so banks, et cetera, are going to be able to offer Bitcoin custody to like the banking company, the software, Jones, not Edward Jones. Oh gosh, they just signed a deal with
Mike Jones?
no. Oh gosh, it was in my news. They provide software to like a bunch of regional banks around the country, right? And so through them, so like your regional banner bank, your smaller banks, you're gonna be able to go in there and be like, you're gonna be able to go and buy Bitcoin right there and have it custodied by that bank. Okay, so then you're gonna be able to see it like right there on your app. Oh, I can do my checking, I can do my banking, and I can buy Bitcoin and I can hold it and custody it, and it's all gonna be bannered and white labeled by NYDIG on the back end, but it'll look like your regular bank right there. So there is so much coming, and I know that we're in a crypto winter right now, but the fundamentals are so strong, and you see so many financial services and institutions rolling out different products that now is, again, I'll go back to David's point, is a really great opportunity if you can dollar cost average, smash the dip and stack right now. Because
and you didn't have in the last crypto winter, you didn't have Kevin O'Leary having crypto.
No.
You didn't have Paul Tudor Jones
No.
having crypto. You didn't have Scaramucci having crypto. You didn't.
And
have,
that was the waterfall moment for me.
But
was
no,
with the mooch.
but seriously, like you have like people who are known for understanding how money works.
right.
Again, like we talked about
Pat
earlier,
Holding
Jamie
is,
Dimon going.
Yeah, and they have diamond hands. So
And did you see Warren Buffett, who said that he would never, what was his quote? He would buy all the Bitcoin for $25,
you wouldn't
right?
even do it.
Yeah, he wouldn't even do it, right? But get this, via proxy, he owns Bitcoin because of one of the banks that Berkshire Hathaway has exposure to. They're offering Bitcoin. And it's a bank in Brazil, of all things. But so he actually has exposure to Bitcoin, is what his company's, so.
Yeah, I think people typically, I guess, promote their own self-interest also, right? So it's pretty clear. But yeah, it's interesting. Should we answer the NFT one, or we've kind of been going a long time?
Yeah.
Sure.
you
So
we have NFT folks here, so I want to hear your all thoughts as well.
yeah, I mean, the only point I will echo is kind of a point that you guys have already covered, which is the way that people think of NFTs today. It's like scratching the surface, right? Like NFT, non-fungible token is really just, a framework of thinking about anything that is non-fungible, right? Anything that doesn't have equivalency with other things in the world, right? And if you think about it, the majority of things in the world are non-fungible. So, I think most of the ways that we represent things, whether it's tracking history for things, whether it's, recording digital ownership, whether it's, even like just, ways of like tracking like timestamps or digital events or whatever, right? I could conceive that a lot of this does end up migrating into an NFT type of ecosystem because it creates all of this sort of like composability, programmability.
I think it was Gary Vee that said that pretty much every transaction can actually be an NFT.
Yeah, I mean, an NFT is just a way of representing
Exactly.
data, right? If you just write the words about what happened, that's technically NFT, right?
Yeah.
So anyways, I'll leave it at that.
I think NFT technology is just going to continue to explode. And again, just like, we're going to see some of these projects and networks, et cetera. It's going to be a whole process like the .com, when we're kind of going through that already. But eventually the NFT will become so commonplace that it's almost like the HTML STMP code on your background. And if I ask most of us, well, how does my email work? What's the code? I don't know, but it just works. I'll send it. We don't care, right? Most people don't care how that works. Same thing. Your QR code will be an NFT, and it'll have your ID and all your stuff on it, and it'll be okay. Then I just move over here and it's all in your digital wallet, and it'll all be pretty much an NFT for your home, your car, your voting rights, your identification, your medical records, all of it.
It just makes sense. Yeah. Kind of what I said a little bit ago. It's NFTs are digital products. At the end of the day, all an NFT is a digital product, a digital good, digital inventory, digital trophy, digital medal, digital certificate. And so as our world becomes more and more digital, like there's going to be a need there. Anybody can stand up a website, right? I mean, do you remember in the early days of people standing up internet
GeoCities
sites?
and free webs?
Yeah.
And
do you remember how many scam websites there were back then, right? And granted, of course, there's scam websites now, and how many websites raised money basically off of being like a site,
sure,
right?
website.
And so we're kind of in that phase of NFT world right now, where you have these sorts of things taking place. And that's going to fizzle out, and the strong PFP projects are going to live on. But again, that's just one minor use case for all of NFTs, and the opportunity is just much, much bigger than that. And what I get really excited about with NFTs is from a consumer adoption standpoint is, you can't see crypto. I mean, you could see numbers, right? And you can't hold crypto like physically, like they'll see and touch. And you can't hold and touch an NFT, but you can see the NFT because it has a digital representation to it, right? And so whether that is just mental for people, I think that's a really interesting component to how people get into crypto overall in Web3. I believe that NFTs will be, call it like the rocket ship that leads to consumer adoption of all crypto. Is that so? NFTs being people's entry point, because especially if you have an interaction with an NFT in a commerce type of environment, and that's the first time you take that in. It's like, oh, what is this? Like, how do I want more of these, or what else can I do with this? So it'll be fun to see what happens.
Yeah.
You have thoughts?
I going back to, I think, the person's original question of what would you have people know about NFTs, is two questions to ask. Does this thing benefit by being immutable, unchangeable, non-fungible, permanent? And does this thing benefit from having some kind of provenance associated with it? And if you answer yes to both of those questions, no matter what it is, NFTs are a good use case for it.
Yeah, interesting.
So I wish people.
We have a couple of people here. I'd love your thoughts, MJ. What do you think? I'm putting you on the spot, but what do you think?
So actually, I got a question actually for Dave.
Oh, but what are your thoughts on the NFT side? You want to skate? You want to skate?
Yeah, so I think I agree that I think NFT is actually a good entry point for a lot of people. I actually see a lot of my friends who were kind of suspicious of crypto, but they got into crypto because of NFTs. And I also have some kind of art collective friends, who kind of are they never paid attention to the crypto world, to what's happening. But some of the artists that they follow actually recently minted their NFTs. That's how they got into this space. So so I agree that I think NFT is a good entry point for a lot of people. Yeah.
All right, now we'll let you
Yeah,
answer
so
the
a question for maybe for Pen as well.
Sure.
On stable coins. So yeah, so we all kind of observed what happened to Terra, right? And I think that probably kind of pronounced the death of all stable coins, at least for now, right? Unless there's some kind of breakthrough in the future, which leaves us with stable coins that are backed by something like so there's like a DAI, right? But people complain that it's capital, it's not capital efficient because of the overcapitalization problem. And then there's like USDC and USDT, right? But then we also saw there like a FUD on Tether almost every single,
Hey, they just did their report today. $82 billion. They say they're backing.
Sure.
That's what they said. They put out their report today.
Yeah, and then
So you got to know it's true.
Sure. And then on USDC, right? And they were also like some Coinbase bankruptcy, FUD recently, right? So do you see there's like a world in the future where actually CBDC is the solution, is the ultimate solution?
Yeah, that's a great question. So would it be fair to kind of more broadly address this question as like, what is the role of like a central bank digital currency in this ecosystem? So the long-term picture, is I do think that governments will further digitize their currencies by adopting these, public distributed ledger type technologies, right? This is what people usually refer to as like the CBDC. But do I think that governments will make their money, permissionless and programmable? I'm not really, that part I'm not so sure about, right? In a way, governments have already digitized money by kind of outsourcing it to the banks, and then the banks kind of digitize it through, online banking and technologies like that. But I do think a CBDC is a next logical step for a settlement layer for, nation states, right? But the way that I see it is they're going to issue CBDCs in a very similar way that they issue their current, like sovereign currencies. They're not going to like publish it on Ethereum. They're not going to, bring it onto Solana. It's going to be up to private companies to do that. So whether it's banks or fintechs or whatever, I mean, that's kind of up to long-term regulation and whatever. And
I have a question.
Yes.
On that. So you're talking about this. I'm agreeing with you because yes, private companies I think are going to be the ones to lead this. So my question to you is, of those companies, from my perspective, I would be probably lining up with Jeremy Allaire. I'm going Circle. I'm going USD. So that way I feel like those. Plus, Visa, right? They're already hooked up, right?
yeah,
BlackRock.
yeah.
BlackRock, Larry Fink, right? They're custodying all of Jeremy Circle's money through BNY Mellon, right? So USDC Circle seems to be the leader in the clubhouse to become the USDC or the CBDC of the US, I would say.
Yeah. So,
But you know more about stablecoins.
So, I do think Circle has a very dominant position, right? They offer a great service and product to the industry, though I don't really see USDC becoming a CBDC purely for the fact that the government, in my opinion, the government is going to want much more control over the system than a public blockchain like Ethereum will afford them, right? I think, my thesis on what's going to happen, at least in the next couple of decades, is governments are going to issue some sort of CBDC that is government controlled. And then the current stablecoin companies like Circle are just going to wrap that CBDC instead of wrapping Fed dollars directly, because this CBDC will be Fed dollars. So that's why I don't think any private company will become the CBDC.
Okay.
But I think private companies will have to adapt as governments launch.
Have you done any research into the? It's called the Hamilton Project. And
I've heard of it.
okay, all right. Now we'll get into some stablecoin action here, my man.
Yeah, I mean, personally, like I think a lot of these like early prototypes and proof of concepts and whatever, like it shows kind of a willingness for world governments to, and some world governments more so than others, right? The willingness to experiment and see what a system like this could be like. But realistically, I don't think we have a good sense of what the first CBDC from a big government will look like, or what even that timeline looks like. I would be surprised if it happens within the next like 5 years. My 50-50 is like on a 10-year time horizon. So
Wow.
we'll see.
Okay.
I don't feel that I could answer that question any better than a CTO of Seattle's top stablecoin. Is anybody
Seattle's
else?
only
Oh,
stable
only-
coin?
Hey, you know what? I'm gonna go further. I'm
US.
gonna say Western Washington's best stablecoin.
King County. no, the U.S. everywhere. Well, this has been a lot of fun. Everybody in the back, thanks for standing this whole time. We will have the people who are going to drive you home.
Oh yeah.
And so thanks for that.
Do we have the lobster buffet?
Yeah, the lobster buffet is in the back, and we do have the caviar as
Smells
well.
good.
Oh, good.
Yep. And we have a fresh pair of Jordans for everybody that's here in your side. So we want to thank you all for being here and getting to experience this luxury.
Yeah. Thank you guys for coming down.
experience.
The first one here.
Jokes aside, though, yeah, it was really awesome having everybody here, and you guys. It's great to chat here with you. But we're gonna be doing this more often. We're gonna be doing this pretty regularly.
Talking crypto.
Talking crypto, having
Love
fun, networking, connecting,
I like it.
and just trying to stream at the same
Do I
time.
get to come back?
Trying to stream at the same time.
Are you guys gonna come back?
Of course.
Let's
Actually,
come back
we will be back here though next Wednesday. So I hope you all can come back next Wednesday. It's going to be, we're calling it TF6 preview. So we're going to be having some of the speakers of past conferences and of the current one come here. And yeah, we'll be having a good crypto
That should be fun.
Web3 conversation. Yep. So that's Wednesday, the 25th. You don't want to miss that overall. And then the big conference is the next week on the 1st. So that's June 1st. That's going to be at the Triple Door. We have Mark Yusko coming into town, who is a legend. We have BJ Boyapati, who is in the area, but he'll be his first time coming to our conference, who is also a legend, has an amazing book that you should definitely check out.
Claire Tsao, one of the co-founders of the Filecoin Foundation.
Yeah.
We have Thomas from Chainlink. Of course, we have Stably and Corey and David's co-founder.
Got Raul Su.
Raul Sood of Mecca Fight Club. They just raised $40 million from A16Z and a whole host of other folks. His co-founder is going to be there as well. Who else do we have? CoinMe, who also, big staples here in the Seattle community. Perkins Coie, Dax Hansen, like super legend on the legal front.
IBM blockchain.
Yeah, Kurt from IBM Blockchain. Elizabeth Scallon of Fine Ventures.
That's right.
She's amazing. TaxBit, they just raised a bunch of money as well. So we'll have some regulation panels. We have professors and instructors.
Portland State
University,
University
University of Washington.
Tiffany McGee from CNBC.
Yeah, and she's also she runs a OCIO firm. And we were actually just talking earlier today, and she was saying how when she's looking at companies to invest in from a stock portfolio standpoint for her clients, she likes companies that are thinking about Web3 because it shows that they're thinking forward, right? So it's like, it's not like, oh, I want to invest in this because of Moon. No. It's like, oh, if a company is thinking about, if a publicly traded company is thinking about Web3, that means they're being innovative, and kind of in that decision making. So, and I can't even believe this. Tushar from Celsius. Celsius is huge network as well. So yeah, lots of great people. Definitely hope that you can all be there. Make sure that you're subscribed to us on TF Labs and on Twitter and all the channels. And we'll catch you all on the flip side.
All right.
Thank you.
We need the McLaughlin Group outro to